Dear learners, welcome to the second class of 13th week of GST course. In this class, we are going to focus on some important mechanical aspects of TDS under GST purview and also on the concept of collection of tax at source. Let us discuss on cross verification of TDS. There is a special provision that enables the central government to cross verify whether the amount deducted by the recipient of supply or deductor is correct and or not, so as to ensure that there are no mismatches between the amount indicated in the electronic cash ledger as indicated in the return filed by the deductor. Let us know about recovery or refund of excess TDS. Recovery of short TDS will be done in accordance with the provisions of section 73 and 74 of CGST Act 2017. If the deductor has made excess TDS, for such excess amount can be claimed in the form of refund as per section 54 of CGST Act 2017. It is noted that if the amount so deducted is credited to the electronic cash ledger of the deductee, then the tax deductor is not allowed to claim the TDS. In such a case, deductee is eligible for claiming refund. Guidelines for TDS and deposits of TDS by deductor under GST regime. GST Council provides the following guidelines for making TDS and deposits by the deductor. There are mainly two options which can a deductor follow while making TDS and their deposits. Option number 1, individual bills wise deduction and depositing the same to the government by the deductor. Option number 2, grouping of deductions and depositing the same to the government by the deductor. Whatever the option tax deductor will choose, he has to follow the procedure prescribed by GST Council and he has to file GSTR 7 by the 10th of next month and must generate TDS certificates through GST and e-portal in form of GSTR 7A. Let us concentrate on collection of tax at source. The term TCS stands for the tax collection at source. TCS concept is helpful to the government for avoiding tax evasion. This concept is borrowed from income tax. Under this concept, the taxpayer, that is, collector of tax, is required to collect certain amount of tax before making the payment to the supplier of goods or services. Such amount to be collected from the supplier should be collected separately and which is over and above the value of invoice. For instance, Mr. A is purchasing the goods with invoice value of rupees 2100, which is the combination of value of goods of rupees 2000 plus tax rupees 100. Then the tax collector should collect tax at 1% of value of goods as tax collection, that is rupees 20, and he has to make payment to supplier, that is rupees 2100 minus 20, which is equal to 2080 rupees. Then the so collected amount should be remitted to central government. The supplier can claim credit of tax amount so collected while making the payment of his tax to the central government. Applicability of TCS. This concept is applicable to only to the companies which are involved in business of providing electronic platform for electronic commerce and which are treated as electronic commerce operators. For instance, popular e-commerce operators such as Amazon, Flipkart, Uber, etc. provides the list and details of products or services which are actually supplied to the customers by some other persons are termed as e-commerce operators. Here, e-commerce operator works in a manner in which it will provide the e-platform for suppliers to sell their products or services. After receiving the order from e-commerce portal, supplier supplies the goods or services to the customers, but the price or consideration for the supply will be collected by the e-commerce operators from customers and then they will transfer the collected price or consideration to supplier of goods or services after deducting his commission. Such e-commerce operators are only allowed to collect the tax at source under GST purview. So, the concept of TCS is applicable to every e-commerce operator and who is not an agent. The e-commerce operators are required to collect tax at source at 1% of the net value of online transaction. Net value of transaction. The net value of taxable supplies or net value of transaction means the total value of taxable supply of goods or services or both made during any month by a registered supplier through e-commerce operator reduced by the aggregate value of taxable supplies returned to such supplier during the said month. It excludes the value of services provided by e-commerce operator on which whole tax is payable by him only for the purpose of tax collection at source. Net value of taxable supplies are determined as net value of taxable supplies is equal to aggregate of taxable supply of goods or services or both minus services notified under section 9 of subsection 5 minus aggregate value of returned supplies. For example, Mr. X, a supplier, made the gross total taxable supplies in the month of April rupees 20 lakh. The aggregate value of supply returned to him is rupees 1,85,000. Determination of net value of taxable supplies. Net value of taxable supplies is equal to aggregate of taxable supplies made minus aggregate value of supplies returned, which is equal to 20 lakh minus 1,85,000, which is equal to 18,15,000 rupees. Here rupees 18,15,000 is the net value taxable supplies on which tax will be collected at source at the specified rate of tax. This ends the second class of 13th week of GST course. In the next class, we are going to focus on some of the important aspects to be considered while making collection of tax at source. Thank you.